Hello and welcome to It's No Secret. Today we are joined by Carly Ellis, financial advisor, insurance specialist, and best of all, mum. Now, Carly is kindly joining me on the podcast today after we got chatting about the intricacies of what happens from a financial point of view when you or people around you pass away. Sounds a little grim, but it's an important topic to be chatting about, particularly for those who might be nearing the life stage where they have aging parents and or their health might be starting to become a worry of yours. Then there's also the question of how you personally can hedge your financial bets against the possibility that you might suddenly pass away tomorrow. So, welcome, Carly, firstly.
Thanks for having me.
No worries. Thanks for being with me. I'm so excited to get into this.
Get into debt.
But necessary. I was going to say exciting, but probably not.
No, not so exciting, but definitely necessary. Yeah.
Needed topic. Cool. So let's get stuck straight in. Number one question that I've been pondering and that we've been chatting about is, why does no one talk about this stuff before you die? So there's a big psychology piece around death generally, and that it's like something that we tend to avoid or just, avoid like the plague, really. Do you have any insights around that?
Well, just down to exactly what you said, there's a bunch of psychology around it. And most of all, I think it's people don't want to make people around them feel uncomfortable, and they may not be in a space to talk about death on whatever day you're talking about it. Some people or some cultures believe that talking about it brings it into existence. So, people tend to shy away from it. And then people just, you generally don't have a feeling about death or the effect it will have on you until it happens. So some people don't have any feelings about it just yet.
Yeah, that's true. Well, what's your stance on it?
I honestly think that thinking more about death makes you live more, because you realize just how precious every day is. And it sounds very like wishy-washy and, let's all kumbaya, but it's so true. So, if you leave the door every morning without the expectation or the unwavering belief that you're going to see your husband at the end of the day, you will give them a kiss, you will give them a hug, and you will not let them walk out the door without knowing how much they're loved, right? You'll tell your kids how much you love them. You'll be more patient. You'll be more kind with your words. There's just so many aspects that are, heightened or enhanced when you realize that life is it's a gift. So talking about death helps you to realize that, right?
Yeah, definitely. The word I think of is presence. It forces you to live in the moment, right?
Yeah. And you think about all those like minutes that you spend on social media and you're like killing some time or whatever. And if you added that all up and, your average is 4 hours a day on screen, oh my goodness, like, that's 28 hours a week that you are missing out on in your life that you get one of. It's not a dress rehearsal. So, knowing more, and I guess the industry that I'm in, I see people that die. They had no plans on dying. That just happened. Or they go to a doctor and they find out that they're really sick and they don't have much time left with the people that they love. And so talking about death really does give you a kick in the butt to start living more.
Yeah, very true. Next question I had was, let's say that I was to have a tragic accident. What would happen to my assets that I have currently accrued? Who gets them? What, like if I did or didn't have a will in place?
Yeah. So just preface this, I'm not a lawyer. So, go get your own legal advice. But from our experience and from what we've seen, if you have a will, everything just flows as per the will's instructions. So you'll appoint an executor to handle your affairs and they'll distribute your estate as per your wishes. There's certain things that will need to be looked after. So if you have a mortgage, you will need to repay that mortgage if you want to continue living in the home. Yeah. Any other debts will need to be sort of repaid before they'll become your own assets. But if you haven't repaid things, then it's your executor's role, I guess, to sell those assets to make sure you don't have any outstanding debts.
Yeah.
If you die and you don't have a will, you'll follow the Administration Act, I guess. And the way that it works at the minute is if you die with a spouse, they get all of your personal belongings, your couch, your clothes, all of that type of stuff. They get $155,000 of your estate and then 1/3 of the rest.
Okay.
And if you've got children, the children split the remaining 2/3. Oh, wow. Okay. If you don't have kids, then they get, your partner essentially gets the whole thing. But yeah, if there are kids involved, then you get 1/3 and the kids get the remaining 2/3.
What happens if you have like estranged family, like mother, sister, auntie, or, even, do they get anything if you don't have a will?
It again depends on the structure of your family and the flow, but the flow is usually spouse or partner first, then it will be children, and then outside of that it goes to parents, siblings, etc., depending on who's in your family network. But what's really interesting is it doesn't specify who the children are. So they could be all of the children that come out of the woodwork that you might not even know about. They might lay a claim to it. It could be in some circumstances where we've seen a husband and wife have separated. They've got a separation order in place, but they're not fully divorced yet. They've got a new partner on the scene. So now the spouse and the new partner, the de facto partner, whatever, are now, equally spouses. So they're dividing that 1/3 essentially of the estate if there's children involved. So
so that 1/3, it doesn't get kind of then like each of the spouses get 1/3 and then the kids get 1/3. It still remains that 1/3
same chunk
divided by 2.
That's it. Yeah.
So what I'm hearing is relationship agreements are really important.
And wills, yes. Yeah. So wills are important for if you're dead because you can't express your wishes. And then there's enduring power of attorneys, which are also equally as important, I think. Again, not a lawyer, but what they'll do is help, from an insurance perspective anyway, help direct the money flow if you're unable to sign a claim form, for example, or you're unable to do all the administrative side of an insurance claim. Yeah.
Okay, that's good to know.
Yeah.
Interesting.
So wills are super, super important. Highly recommend everyone has one.
I feel like just people coming out of the woodwork freaks me out because and that's why everything needs to be written down and the names of the children as well.
That's it. Name your children because otherwise they're anyone's. Well, not anyone's, but if like we were talking about, you never know where your partner's been beforehand. As a female, you know how many kids you've had, but as a male, you might not. So
So another kind of subsection question I had was, are different assets treated differently, or does it come back to what is encompassed in your estate? Yeah,
it's just basically everything's just lumped into your estate.
Yeah.
And everything's sort of divvied from that.
Yeah.
Yeah.
Do you know, I guess, what happens with KiwiSaver, knowing that it's kind of a locked up asset?
Yeah. No, it's forms your estate.
Oh, yeah.
So if you've got more than $15,000, you need to have a will or probate to unlock KiwiSaver. If it's under $15,000, you can get your, executor or whatever can get a letter of administration, which will then, pass the money through that way.
Oh, yeah. Okay.
Yeah.
Okay, that's good to know. Do you know how long it takes for an estate to be settled?
No. Well, I roughly, anecdotally do. It's between a year. It can be up to a year.
Okay.
Yeah, depending on how you pass away. If they need to do investigations or whatnot, it can prolong the death certificate and and stop the proceedings, blah blah blah, from there. So
right.
Yeah.
So thinking from an insurance perspective, that's really important because if you have life insurance or something like that, you could potentially not get any money as a spouse from someone that passes away or whatever for quite a long period of time.
Yeah. And that's why when we talk about insurance, the amount and the type of insurance is really important. So we call that right amount, right time.
Yeah.
But we also need it to go into the right hands. So and that can be achieved through sort of who owns the insurance policy. The owner is the person that gets paid. So, that's a bit of a thing to think about when you're sitting down with an advisor. If they're not discussing where the money should flow, who should own the policy, that's equally as important of how much or what type of insurance you have.
Yeah, okay. And that's a perfect segue into a conversation that we had recently about owning the policy versus like insuring kind of other people.
Yeah.
Yeah.
That freaked you out, hey?
Yeah, it just freaked me out. I was like, oh man. So can you elaborate a little bit?
Yeah. So in an insurance contract, you've got two parts to play. So one is the life assured. So that is the person that the insurance is on, right? So everything.
This is for life insurance specifically.
Well, for all insurances, yeah. But I guess the situation that we spoke about was mostly on life insurance.
Yeah.
So, if you have insurance, you are likely the life insured. So if you die or if you are diagnosed with an illness, some money will appear.
Yeah.
The policy owner is the person that gets paid the money. So that could be you. So in the event that it's life insurance, the policy owner is the person that's getting paid, but you're dead. So where does that money go? It's not you. It gets stuck in your estate. It's all very messy.
Yeah.
You can avoid this if there's like a partnership, husband-wife situation. you can jointly own it. And if that means if the wife or husband passes away, or wife, whatever, the money automatically flows to the surviving spouse. So it doesn't get involved in the will. You don't need the will. You don't need anything like that. You're the surviving owner. The money just gets paid straight to you. More interestingly, what we've seen recently, and you kind of alluded to it in the intro, is around, older parents. They may still have a mortgage on property that, you might have concerns about, that it's not going to be mortgage free by the time it flows to you.
Yeah.
You can actually take insurance out on your parents. So they are the life assured. You are the policy owner. That covers that mortgage debt. So if your parents pass away, you get a lump sum amount of money. You can use that to pay off the remaining mortgage, and then you've got the home or whatever you're looking to protect.
So do you then figure out what the debt is, whether it is a mortgage or otherwise? Can you insure on personal debts as well?
Yep.
Yeah.
Yep.
So it's just debt generally.
Yeah. You just find a number.
Oh yeah. Okay.
Right. So and then again, this is important why we're talking about death, right? Because you need to ask your parents or whoever you're talking about, do you have a mortgage?
Yeah.
And how much is it? Because if something happens to you, I want to make sure that I don't have to think about that. I don't want to have to go through the process of selling a house. I'm grieving my parents' death. I don't want to have to now list a property and deal with real estate agents. So yeah.
Yeah, it's so interesting because it's such a hard conversation. Getting to the point where you have the intricacies of how much debt do you need to cover. Yeah. The step before that is really making sure you're having those open conversations and being fully clear and honest about who has what money and how long it's going to last you.
Yeah, and that spearheads two issues, right? We don't talk about money and we don't talk about death. And they're both really, really important. And, group them together. I don't know, have an awkward conversation dinner or something and, just get it all out in the open.
Make it an enjoyable experience.
Something fun. I don't know, a family bonding experience. Funny, I actually recently just found a death cafe. So they meet once a month and they talk about death. They're based at Auckland Art Gallery and they meet, I think it's the second Sunday of every month, and they talk death. And it's a place where you can come have open, honest, vulnerable conversations about fears of dying, what you would like. You may have experienced death, you may be grieving, you want to talk about it. And because anytime you start talking about it in a normal social situation, people go and suddenly need to top up their drink, or they just they don't want to. You're the weird person that's talking about it. Yeah. And I think just by having conversations about it like we are now, or with other people, you put yourself in a better position to talk about death. So then when someone's grieving, it's actually you're actually a really good person to talk to because you're not fumbling over your words or scared of saying the wrong thing. And
definitely. I personally am terrified of death. I think it's something I don't even know if it's me. I think it's the fear of the people around me.
Yeah.
And I reckon that is more scary than you. I don't know what it is about that, but yeah.
Because you're not going to know.
Well, yeah, exactly. Hopefully it's not too painful. Yeah. But I don't know where I was going with that. But
well, when you were talking about what if I had some tragic accident and I died, what happens, blah, blah, blah. And then one thing that a lot of people don't realize is ACC actually provide, if it was an accident, they provide really, really comprehensive benefits for people that die in an accident. So, for example, they'll cover your funeral. So, $7,000-ish of a funeral. They'll give you a survivor's grant if you're a spouse. So if you're, you're a spouse of someone that's died in an accident, you'll get a survivor's grant. They'll pay 80% of your income for 5 years.
Wow.
Yep. If you die in an accident. And if you've got kids, they'll pay until the youngest child is 18. Or if they're going into tertiary study, they'll pay until they're 21. Wow. 80% of your salary. Yeah. There's caps. So it's capped at 112 grand, I think, a year.
Oh, yeah.
But if you were to pass away, that's a lot of money, especially if you've just had a young child and, you're going to be paid till 21. So
sure.
There's some money there.
How do you get that? Having that in place, is it automatic? Do they kind of,
as long as
to you?
No, if you've got a foot in New Zealand, you don't even need to be a New Zealand citizen, I think. Right. You may need to be a permanent resident.
Oh, yeah. Okay.
Check. But yeah, usually the funeral director will tell you about it because they'll see it was an accidental death and they'll help you sort of with that process. But
yeah. Okay.
Yeah.
Interesting. Interesting. rogue question. What happens if I don't know like my partner, spouse's passwords or accounts, or like, I just have no idea and don't have that conversation?
Yep. So bank accounts, all of that type of stuff.
Yeah.
That's going to be a costly procedure if you don't have a will in place, because you're going to have to get all the appropriate documentation, all of the stuff to show that you were the person that should have access to bank accounts and all that type of stuff. I'm not sure about things like Facebook or Instagram or like anything like that. Find your best friend and give them your password and, tell them what history to delete off your computer. But key. Again, exactly. That's why you need to have a conversation. You need to know these things because, sometimes they happen. And so we do say you probably need around 10 grand to decide if you're going to have to go through that process of estate settlement.
Yeah.
Again, just to get access to bank accounts. It's not easy.
Yeah, it's not cheap either.
No, and it's not something you really want to be doing when you're grieving.
Yeah.
So a lot of people do leave it for a long time before they start that process, if they can financially.
Yeah. I guess it kind of speaks to having a good, if you can, network around you, or like having those open conversations with, people in your life that you care about, but also that know you well, so that in that situation they can advocate for you in various ways.
Yeah. And one of the big ways is around funerals and the funeral cost. Because again, you're all in this sort of cloud of I don't know what's happening, and so we've just lost someone that's really important to us.
Yeah.
And like, no disrespect to funeral directors or whatnot, but they will be offering you products, right? Yeah. And you don't want to look like you're the stingy one buying the cheapest coffin or whatever it is. Yeah. And so you'll just be going, yep. And if you don't have 10 grand aside or 15 grand aside, you don't want to be pressured into a funeral that the person that's just died wouldn't want. The gold handles and the horse-drawn carriage, and you don't want to go into debt for somebody's funeral. So it's really important, again, having those conversations. Like, what type of funeral do you want? I know my mum doesn't even want a casket. She doesn't want to be embalmed. She thinks the thought of stuff in her's yuck. So she's like, wrap me in a sheet, burn me on day 1 or 2. keep my ashes, plan a party when you guys are feeling more like a party, and like that's the job done. And legally, you just have to declare a death, and then dispose of the body in a like healthy way. Yeah. Like you don't just chuck it in the river. So don't get pressured into this end of life celebration or ritual.
So
exactly, because people don't talk. People don't question the cost of a funeral. And there are, believe me, just like weddings, when they put the wedding tax on, there's definitely a funeral tax as well, because it's what blah blah would have wanted. Yeah.
I guess there's always going to be people in every industry to make money. So you want to be mindful of that. Yeah. So a rogue side note, how much is the average funeral cost that you see, I guess, coming through in claims? Or
so I hate using the word average funeral because, again, I don't want people to think if they're spending less that they're doing a disservice to their loved one. But in terms of insurance, you get $15,000 usually within 48 hours, and that's called like a funeral grant. So you could use that if you don't want to spend the full 15 grand on a funeral. You can use that to fly people over that the person would have really loved to have there. Travel expenses, put on something at your house. Use it as part of the life insurance because it's an advance payment. It's not an additional payment. So it does come off the amount of insurance that you've got.
Oh, right. Okay.
That's the amount that they can pay without a will.
Oh,
so they can pay it really quickly.
Oh, okay.
Yeah.
Interesting. Yes. That's good to know. I'm like, okay, I'm having a party. I like your mom style.
Yeah.
Well, yeah, that perfectly answers so naturally I'll need a funeral who pays for it. Yeah. Yes, cool. Okay, so
work and income can give you a grant as well. Like if you're below certain income caps, you can get around $7,000 for a funeral, which kind of indicates what the average funeral is worth. But depend again if you want to be cremated, if you want to be buried, if all of that. If you want an Italian Mausoleum, they're like 40 grand. So it depends on what you want.
Yeah, wow, that's a lot.
Yeah.
So I was going to say I might be leaving people behind that I love without an income as their support outside of the likes of insurance for things like the funeral costs and other things. So you mentioned survivor grants.
Yeah, so that's through ACC. Yeah, ACC can give you a survivor's grant. You can get types of life insurance that are drip fed.
Oh, yeah.
So you'll be provided with like a monthly amount. If you think, oh, $2 million, I don't know what I'm going to do with that. There's two ways to manage that. One, within a life insurance product usually is a financial advice benefit. So you can get an advisor to come and do a full plan for you, or you can have that drip fed option. So it's fed to you either until you would have been a certain age or for a portion of time, usually around 15 or 20 years.
Yeah, okay. Is that that's a good point about basically you receive this massive lump sum, what do you do with it? And if you don't have the financial knowledge or tools to know what to do, then how can you trust that that's going to be a good, quote unquote, good financial advisor?
Yeah.
And it's up to discretion.
Really. That's it. And like with any type of relationship, it's around how do you gel with that person, right? Do they have the same values as you? Do they see things in the same way that you would? So, you'll get a financial advisor that says, absolutely, pay off your mortgage and be done with it, rah. Or you might get one that says, well, why don't you pay off half and use some of the equity and buy an investment property and da-da-da. So there'll be people that you need to find those people that are in your lane and work with them.
Yeah, cool.
Yeah.
Okay, love it. What about for kids? Is there any differentiating things around the income, like replacing an income? So let's say you lose a parent.
Yeah.
Is it the same kind of policy where there's a lump sum that you can either have it drip fed or receive it all in one?
Yeah, I mean, usually if you've got a parent so you lost a parent but one's still around, they will usually be the receiver of the money. If you lose both, then that whole amount would form your parent's estate, and then you'd be drip fed it. Again, it would be dependent on what was in the will, like when you're allowed to have it. Yeah. So with our boys, I questioned the lawyer and I was like, look, I think default it's like maybe 21 or 18 or something. I was like, look, I made some pretty shitty decisions when I was 21. Any chance we can push this up to like 30 or 35? And you can. It's a vesting age, right? And you can ask your the executor. Oh, I just know, I've seen as well. You can say to the executor of the estate, look, if they want to do something sensible with the money, release it to them, because it comes down to the executor's decisions. Yeah. Like if it's education or they want to buy a first home or they're starting a business and you think it's got legs, let them have the money, but just don't give it to them on the 18th birthday at midnight. And yeah.
So that decision around who that person is very important. Yes. If they're going to be making some key decisions for you.
Yeah. And the welfare of your family once you're gone. Yeah.
Yeah. Awesome. Okay. What else do I have here? I feel like you've just answered the next three questions. Do you have any other words of wisdom or kind of tidbits, I guess, or things for people to think about with life insurance specifically in the event of a death?
About getting insurance, or if you've got a family member that has insurance?
Either or. So is there questions that they need to ask when they're setting up that policy initially?
Yes.
Like key questions, and then also in the event that someone does die, things to think about, like top level.
Yeah. So I guess when you're setting up insurance, especially life insurance, you need to ask, if you're going direct to an insurance company, they may not give you, they'll give you the fine print, right? And you're expected to read through it. If you're going through an advisor, you need to ask them, are there any exclusions? So an exclusion refers to an event where you wouldn't get paid.
Yeah.
So typically there's blanket exclusions, especially around suicide, for the first, say, 13 months of a policy. So if the life assured was to commit suicide within the 13 months, the insurance wouldn't pay out. Further to that, you might have specific exclusions on your own policy. And we usually see that for people that are out there doing like helicopter hunting or, like they...
Extreme sports.
Yeah. And so if they were doing that and they, died, they wouldn't be paid. It's also important to know on those types of exclusions, especially those activity ones, it also includes for if you're preparing to do those activities. So you might be packing your bag to go hunting. And I've seen this. Actually, I've seen it on a rowing one. This guy was a competitive like wakama. So he's packing his bag. He's jumping in the car. He's driving to Wakaama, and he's in an accident. Or another one where I ran it past an underwriter. He's in the boat and has a heart attack. So it's got nothing to do with the actual boat itself. He wouldn't be covered. He would not be paid out because it's he's preparing for the activity. So it's an interesting one just to be aware of. And
It feels quite shocking.
Yeah.
Yeah.
Again, not to plug advisors, but that's why you should use an advisor when you're getting any type of financial product, because we know the fine print, we know how it's translated and what it actually looks like in real life. So, we can highlight these things to you before you decide whether to take the policy or not,
Yeah, for sure.
Yeah.
Oh, I'm still in shock. It's pretty, because my weasel out of it brain goes, well, but how do you prove that they were driving there?
Yeah.
But I'm maybe just trying to bend the rules.
Oh, and I'm also going on the extreme. Usually they're going to do it in good faith. They'll go, oh, look, okay. We'll pay.
Yeah.
Same thing if you forget to tell them about that mole that you had chopped off when you were applying for life insurance, because everyone's always fearful of, what if I haven't told them? And they're going to, usually they're really good about it. So if it's something that you've clearly tried to hide, like you literally had breast cancer 2 years ago and you didn't tell them that you had it, they're going to they're going to come down pretty hard on that. But if you forgot that you had a series of migraines in 2017, usually they're not going to worry about it, especially if it's something like you die of in a car accident, all right? Because it's not medically linked, potentially not medically linked. But they'll do something called retrospective underwriting, where they'll say, okay, had we known that you had all of those migraines, we may have charged you a little bit more on your premium.
Yeah, right.
And they'll just deduct that from the claim. But
okay.
Most of the time you don't see that. Most of the time they're very clean-cut claims.
Yeah. Very
rarely will you see issues around what we call non-disclosure, or people that haven't been open.
Yeah, cool.
Yeah.
Okay.
Don't fear it.
Yeah. I'm like, mental note. Done. Any other key questions?
Yeah, I guess it all depends on what type of cover you're going for, but it's all around, as I said, right hands, who will get the money, right time, when does this pay out, right amount, how much will I get in each of these events, because they will all be different. And, you're going to have your specific things that you're most worried about, and make sure you ask your advisor about it. And if you don't do it straight away, you can do it, later on when you've had a bit of time to process the actual policy and everything like that. You don't just get a one-off relationship with your advisor. They're there always. Yeah.
Last question from me, and you kind of alluded to this. Yep. So I am personally looking at taking out life insurance on myself, and I'm trying to figure out how much I need to insure myself for.
Yep.
And I'm thinking maybe 50 grand, but I'm like, is my life only worth that much?
Well, it quickly adds up. And you'll go through like a bell curve of insurance need, I guess. So, when you're young, you're single, or you don't have any kids, you don't have any debt, your need's pretty low. You might want to cover a funeral or, student loan or something like that you might have.
Yeah.
When you start getting a mortgage. So I look at two things, debt and dependence. So any debt that you've got. Yeah. So yeah. So it's like, if your mortgage is huge, cover it. So you don't have to cover all of it. Cover some of it.
Yeah.
If you can afford to, in terms of the insurance premium, cover the whole thing, because the last thing you want to be doing, or your partner or whoever's living in your house wants to be doing when you die, is thinking about the mortgage repayment. So cover any debt that you've got. Then we typically say for kids, leave a portion of money each, and that could be to fund them into their first home, if that's of importance to you, or to fund education. And it might not be private school education, but it might be something like, yes, I want them to be able to go to France and do that, what do they call it? Or like, do a year's schooling over in France if they want to do that whole swap thing, exchange student, whatever. Yeah. And then the last piece is around replacement of income, because, obviously if someone dies, you usually will lose an income stream, and that might be your own income stream because you've had to stop working to look after kids, for example, or the person that's died's income stream. And usually say a good amount is around 2 years of income, because that's going to give you enough time to sort of get back on your feet. If you've got a home, if you own a home, you hopefully have paid off the mortgage, so you've got a debt-free home to live in. You've got 2 years to sort out whatever life is going to look like now for you, because that first year will go past really quick. And then you've got some money for the kids if you've got kids. So as I said, you'll get this real bell curve event, because when people typically start to get to doing all those things in the 30s, 40s or whatnot, you have huge amounts of insurance.
Yeah.
But then as the debt becomes lower and as the dependents become less dependent, it starts to drop away. And that's when we start to shed insurances, and just as they start to get expensive.
Yeah. I was going to say, I thought that it's like the older you get, the more expensive it is.
Yes, exponentially.
Yeah, right.
Yeah. So
what is the price difference?
Huge, huge. So what was I looking at? So I think my dad,
Mm-hmm.
I'm just really winding this back. He's got maybe like 50 grand of trauma insurance.
Yeah.
Doesn't need anything else. They've got a debt-free home, don't have any financial dependence anymore. Why would you have life insurance?
Yeah.
So he's got trauma insurance. That pays for things like cancers, heart attacks, whatever. Yeah. So when he took it out, I think it was something like $16 a month for 50 grand of trauma insurance.
Yeah.
Now when he's 63, it's $315 a month for 50 grand. So it starts ramping up really quickly. It depends on, again, what type of insurance you've got. Life insurance doesn't ramp up that much until maybe in your like early 60s, mid 60s. It's all tied to the likelihood of you needing to claim.
Yeah.
It'll start increasing rapidly. Yeah. But you're good for a few years.
Oh my gosh. I'm taking, all of the pointers.
Yeah.
Also, I'm like, does my mum have life insurance, and how much does she pay?
Yeah. We see some huge premiums, and again, it's all around need, right? If you do, some people are really risk averse and they want to cover everything, and they're financially happy to cover really high insurance premiums. Others have, their own they're self-insured, so they may have assets that they're willing to liquidate. They might have emergency funds, or things that they're happy to rely on, or
cool. Okay, love it. Cool. Well, I think we should wrap up there. Thank you so much for diving into death with me. And for anyone listening, thanks for tuning in. We are going to do a bit of a part 2 on insurances in the next episode, so stay tuned for that. We'll be covering different types of insurances. We'll also talk about a couple of things that we've chatted about today as well. Thanks so much, Carly.
Thanks for having me.
No worries.